All right, good morning, everyone. It's 8:59 in the morning of September 26, 2022, and this is my pre-market strategy session. And the title of today's video is It's Still Bearish, and it is. We are in this rather easily defined down channel here. You can see that these are the Qs, by the way. And I'm more bearish on the Qs than I am on the SPY or the S&P, because the S&P does contain some defensive sectors like healthcare, energy, and utilities. Now, that's in relative terms. So, healthcare, consumer staples, I should say too. Healthcare, consumer staples, energy, and I've forgotten the other one. Anyway, so the Qs don't contain any of that. The Qs are all tech, all growth, high multiples, stuff that does not perform well at all in an economic downturn, in the down cycle in the economy. And that's where we are. We are in a contracting economy. So here we are. Now, we are, according to my charts, we are at extremes here. We are at an extreme low. It's a little early, according to this chart, it's just a little bit early for price to start breaking down below right now. So it looks like the middle of October is probably more around the time frame than we can expect to see a breakdown below these recent lows. This recent low right here, I'll put it on the 16th of June. And that price level is 271.39. So I started getting short back here on this day on the 13th of September. And I added a little bit more on the 21st of September. I anticipate that we have about 2 more weeks to go until we start breaking down into further lows, only based on the technicals, only based on what I'm seeing here. Actually, so let's see, 23rd one, let's see, today's the 26th. Okay, so 26, 27, 2, 3, 4, 5, 6, 7, 8, 9, 10. About somewhere between 2 and 3 weeks from now, or around 11 or 12 trading days from now, I expect to see price dropping back below this 271.39. In the meantime, I'm going to start working my way out of my short position and anticipate building into a short position again in the next couple of weeks. So we've got the VIX here. The VIX is also, and this is, you're not supposed to chart the VIX, by the way, but I do. And so here we have the VIX kind of at an extreme right here. And I imagine that it's going to begin coming back down just a little bit at least for the next big leg down, which ought to happen somewhere between, somewhere around the middle of October, maybe give or take 3 or 4 days around the middle of October. Yeah. And so things are definitely looking really, really bearish out there. In the meantime, before the sort of next leg, the next breath, markets just seem to, move this way. They take a big move down, they take a breath, and then make the next move down, take a breath, next move down, take a big breath, big move down, so on and so on. And so I'm looking for a little bit of a bounce right here, but this leg right here, so we'll say it started on the 16th of August. Yeah, I'm looking that eventually, and it's not going to follow that line, of course, but pretty much it's going to do something like this. It's going to extend past this 271.39. Timing is everything. I'm going to start averaging out of my short positions and then start to average in again once we come up and hit some resistance level. I imagine actually 280 ought to act as resistance. So I'm going to keep an eye on 280 and see where we end up, see how things end up at 280 right here. and then start probably averaging in to a new down position after 280, after it hits 280. Let's see what else is going on. I'm just gonna kind of stick with that. I mean, in a market like this, all correlations move to 1 or -1, and it's, in my experience, at times like this, it's just a good idea to focus in on one single equity, fund, whatever it is, and just continue playing that one fund. I mean, because really, there's plenty of action in other places, but there's way too much for any one person to handle across multiple asset classes and so forth. So the Qs, tech, I'm definitely very bearish on it. I think we have probably about 2 more weeks until we break down below this. This is the SPY. Until we break down below this 271 level right here, and that's only according to this bottom section of this channel. Here's the top section of the channel, and yeah, that's pretty much it. Market crash from oversold conditions, and so we are getting into oversold. I think that once in oversold here is on the relative strength index. And here we are. Let's see, on Friday it closed at 29.78, so it's right there beneath oversold conditions. If we see a leg up right here, it probably won't get past this level, and then I'll be looking for the real big crash. September and October are famous for being big crash days. Also, the next earnings season kicks off, I think it's in the middle of October, right? Yeah, this quarter ended. Let's see. Let's look at the calendar here. So we have September. Let's go to, so January to February, March. That's Q1. They report in April. Then Q2 is April, May, and June, and they report in July. And then Q3 is July, August, September, and they report in October. So yeah, somewhere in here around the middle of October looks like good timing for this channel. The bottom end of this channel crosses this 271 at about that time frame, about the middle of October here. Let's see, October. This is October 10th and 11th, right here, kind of right in the dead middle of where these two lines meet. Coincidences. It's a coincidence. It's a coincidence that this line crosses below the 271 line at the same time. Q3 earnings reports are coming out. But the more coincidences you can stack up at any given price or time, the better, really. All right, everybody. Good luck out there. Keep your risks tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.